Okay, we are live. You can start.
Hello all, welcome you all in this live weekly Nifty Expiry Day Market Insights. I am Vinay Rajani from Prime Research of HDFC Securities, and I am joined by my colleague Mr. Siddharth Deshpande. Hello Siddharth, how are you?
Yeah, I'm good. Good evening.
Yeah,
Sorry, good
so
afternoon, everyone.
so because tomorrow is a holiday and we are having a Nifty expiry, weekly expiry in today's session, and we are here to discuss about how market and Nifty looks for the rest of the session. Half of the session is already passed now up to 3:30. What is the outlook on the market and what is the levels that we need to watch that we are going to discuss. So the main agenda behind this webinar is to discuss about how the various derivative indicators are placed at the beginning of the day, how they have changed till now since the morning. So the data has changed after opening, gap of opening, and Nifty is into currently a big bullish momentum. So we will also discuss the intraday derivative developments in the data. We will also discuss the intraday chart, which will give us insight about the important levels technically as well as on the basis of option distribution derivative chart. Then we and at the end we will discuss the outlook on the Nifty, which derivative trading strategy trader should adopt in today's trade so that he can generate some alpha by doing trades in the Nifty expiry in today's session. So without much ado, I am starting this discussion with our derivative analyst Siddharth. So Siddharth, let me ask you first question to you. So Siddharth, can you tell us how derivative data was placed at the beginning of the day? Will you please summarize what is the development there?
Yeah, hi, good afternoon, everyone. So this is the Prime Dairy weekly report we have published is on Sunday. So you can go through that, which is available on website also. So basically, in the last week, we can see that there is almost 1.68% price change in price in the Nifty spot compared with the rise in open interest, suggesting long built up in the Nifty future, which is happening over the week period. Same case with the Bank Nifty also. Bank Nifty has also risen by 1.95% with the open interest has basically open interest has come down by 0.69%. Basically, it says the short covering in the Bank Nifty in the last week. And so there is a long build up in the Nifty and short covering in the Bank Nifty. And Nifty is continuously rising from last 2 to 3 sessions. So we are expecting the same movement currently. Yeah, go ahead, Vinay.
Okay, yeah. So how derivative indicators have changed since morning? So you have talked about the last session's development in the derivative side. Can you summarize how derivative data is developing since today morning after opening of the market?
Yeah, correct. Very nice. So basically, I forgot to say that FI's short covering was also seen in last 2 sessions, which is basically trading at a higher level around 0.20, which is a good indication. So FI has also started covering its short positions. So we are expecting this positive momentum in FIs also. So this short covering might touch to 0.6, 0.7 level in coming session if the Nifty moves like positive like this only. And if you see the today's data, currently, Nifty is trading around 25,900, 25,850 to 900 level, which is basically consolidating around that level only. And if you see the put option data around 25,700, 800, we are seeing a strongest support in the Nifty, where short covering loss is observed. And at the higher level around 26,000, 25,900, where the major call rating is happening. But that call rating is also winding around 25,900. So I think there is a channel open on the upper side if Nifty is able to cross about that 25,900 in some time. So overall put rating is observed around 25,700, 25,800. Call rating is observed around 29,000. So 25,900 to 26,000 level. So these are the two important support levels. And if you see the put call ratio, if nearest strike prices, so currently it is at 1.25 level, which is reflecting a bullish bias. We have considered put call ratio around from 25,700 call put and to up to 26,200 call put. If you calculate that, it comes around 1.25 level. So support zone around 25,700, 800 level, resistance zone 25,900, and say 26,000 level. Yeah, over to you, Vinay.
Yeah, so Siddharth, also tell us what is the indication from the implied volatility, because today is the expiry day and we have to track the at the money option volatility, implied volatility in the options. So what is that suggesting since morning?
Yeah. So normally in the call, put option there is a higher IV and call option there is a lower IV compared to put option. But this time we have seen that higher call option IVs and lower put option IVs. Currently IVs, if you compare both the IVs are on the lower side below 10 to 10, 11 level. Let's say if 26,600, so 26,000 call option IVs are on some 9 or 10 level. Yeah, 25,800 put option is around 8 to 9 level. So which is on the lower side. So volatility is actually suggesting lower momentum, but volatility level can change if Nifty is able to surpass that 25,900 level, which is a major resistance level in the Nifty currently. So we can see a rise in IV once it surpasses 25,900. Similar case with the 25,800 level on the lower side. If Nifty was able to cross that level, then we might see a sharp jump in put IVs, and where Nifty can, we are expecting that Nifty will fall towards the 25,700. So on the lower side, we are expecting Nifty around 25,700 if it is breaching that 25,800 level. On the upper side, if it is Nifty is breaching around 25,900, then we are expecting Nifty to head toward 26,000 level in today's session. So these are, in the meantime, we are expecting that Nifty will move sideways in the band of 25,900 to 25,800. Yeah, technically also in the you can tell. Yeah, go ahead.
Yeah. Yeah, so what I could gather from the Siddharth's viewpoint is that the since morning there has been IVs in the options, the call and put both side that has been around 9 or 10, which is usually lesser than the regular IVs. So whenever IVs are lower, we can expect market to remain range bound because higher IVs always suggest higher volatility and higher momentum on the either side. But here, since we have the IVs near 9 to 10 in the at the money call and put option, it clearly suggests that after opening, market is suggesting a narrow movement. There should not be a bigger movement. But as we all know that the market has been rising for last 4 trading session and FIs have started covering their positions in the index future, there is a clear cut momentum there. So we have to keep some space and overall the momentum and the trend is clearly favors the bulls. So we have to be conditional also. Since morning, it is showing a range bound session. But once we see Nifty crossing 25,900 on the upside, then the continuation of an uptrend will be there. And in that case, IVs can rise. So volatility will also rise in the next session once we see a level above 25,900. And 25,780 is the previous day's high. In the technical terms, the previous day's high always acts as a support also. So 25,780 is a technical support below which we can expect a downward movement till 25,700. As we have risen almost 1,000 points in last 4 trading session, it might happen that the running correction could come 100 points here and there can come anytime. So level below 25,780 can bring Nifty down towards the 25,700. In that case, you can play buying put, and 25,900 is a resistance above which you can play expiry session with buying call option of 25,900. So this is a conditional call, but till now it suggests that market should remain range bound and you should wait for the levels to cross on the either side. That will give us a confidence. Now I would like to show here the technical developments and how Nifty is looking technically intraday as well as positionally. So let me share my screen. Yeah, Siddharth, is my screen visible?
Yes, yes, you are.
Okay, Siddharth, is it visible?
Yeah, it's visible. Go ahead.
Yeah. So as we can see, this was the low on 30th September. This is the daily chart of the Nifty. And on 30 September, Nifty made a low of 24,587. And from that level, we were almost reached to 26,000. So rally of 1,400 points in the Nifty in last 12, 13 session. And in last 4 trading session, Nifty has risen almost 1,000 points. So this was a low of 25,060. And after that, we have seen a rise towards 25,926. So clearly into a momentum. Nifty has broken out from the symmetrical triangle. This is the symmetrical triangle, which this is the downward sloping trend line. This is the upward sloping trend line. And this is a clear cut breakout, which came actually on 25,400. And after that, Nifty has found a momentum and it is continuously rising. So positional trend has been clearly up. There could be a running correction in the overall uptrend, and that cannot be denied and that cannot be ruled out. But yes, overall trend has been quite bullish. And this is the intraday chart, 15-minute chart. And I would like to show how this 25,780 is an intraday support. So this is the high which was made on the Friday, 25,781. And since morning, we can see that Nifty is trying to protect that level. So 25,781 here becomes a very strong support in the intraday session. Once we see 25,780 is getting breached, then we can see an intraday correction, which can take Nifty towards the 25,700 odd level, where we have seen some put writing happening. So 25,780, below that 25,700, that is the support. And that is the zone you can play with buying put. But till then, you should wait for market to move on the either side. Either we should wait for the resistance to cross over or support to be breached. On the higher side, today's high is 25,926. Once we see sustainable level about 25,900, then the strategy should be to buy the call of 25,900 in that case. In that case, we will expect a higher IVs in that case developing. But as of now, the range bound movement is expected till this range is getting broken on the either side. So this is a technical development overall, and one should remain with the trend and should not anticipate any move against the trend. So yes, bias is towards the upside more, but yes, below 25,780 one can expect some downward correction. That could be a temporary running correction. So I have spoken about the technical developments. Now I would again ask Siddharth. So Siddharth, we have discussed technical developments on the charts for the Nifty. We have also discussed the derivative development since the beginning of the day after opening of the market. Now, depending on all the rationals that we have discussed till now, which strategy you are suggesting for our traders, for the expiry traders, to trade in the Nifty?
Yeah, so according to me, there is no trade zone between 800 to 900 level unless and until Nifty breaches around 780 level on the downside. One should buy put option and then they can target 700. We are not expecting major move below 700, so 700 should be a target level, and at 700 one should buy if you want there. On the higher side, 25,900 is the major resistance level, and once it cross sustain at least for 5 minutes, then trader can expect 100 point movement. There are tremendous short positions still available in the overall market, so we are expecting a short covering to continue, and that can basically fetch Nifty towards 25,100, 25,150 level gradually. 26,100, 26,150 level gradually. Yeah, over to you, Vinay.
Yeah, so I would like to summarize over here whatever we have discussed till now. So the guys, the positional view on the Nifty is definitely bullish, technically as well as derivative wise. We have seen long build up in the Nifty in yesterday Friday's session, and short covering in the bank Nifty. So put call ratio has been gradually coming down in intraday session, as well as on Friday we saw some reduction in the put call ratio, which suggests a sign of profit booking, but that should be combined with the other indicators as well. So this is one of the indicator which is suggesting that upside could be limited, because put call ratio has been rising since falling since morning. Previously it was 1.21, now it is trading around 0.93. So that is not a bullish sign, at least for the intraday expiry session we can say. And overall positional trend is positive, but some call writing happening at higher level around 25,900, 26,000 that can cap the upside. And on the downside, there has been support around 25,700 to 800 where put writing has been happening. IVs are quite low, around 910 is a very low number we can say. And because of that, we can expect a range bound movement in the market. And so as I said, Nifty has risen almost 1,000 point in last four trading session. So here we can say some sort of consolidation in overall bullish trend. So this is what we wanted to say, and our strategy is to follow the levels above 25,900. You can go buying calls in the Nifty of 25,900, and below 25,780 you can go for buying 25,800 put to get the intraday gains in the put side. So this is the conditional call we are taking for the rest of the session in the Nifty expiry. And here we would like to conclude. And last but not the least, today is a Diwali day, and on behalf of HDFC Securities, we wish you a very happy Diwali to all of you and prosperous New Year. Thank you all for joining, and we'll see you in the next weekly expiry session. Thank you all to join this webinar. Thank you, everyone. We are concluding here.